Welcome to CrushTheStreet.com's weekly market wrap-up. After a volatile week rife with natural disasters and election jitters, we're now returning to some semblance of normalcy. However, normalcy currently means lower valuation in the stock market, especially after Wednesday's huge sell-off, with the highlight, or should I say the lowlight, being the 300-point drop in the Dow Jones. Currently, the Dow bears are challenging the strength of the 200-day moving average support line, and a break below that critical level could spell further technical erosion. Making matters worse, the other major indexes are below key psychological levels, with the NASDAQ registering value south of 3,000 and the S&P 500 struggling sub 1,400. Now, will we continue to see further weakness in the equities? With Apple falling below the 550 mark, the market is clearly in a risk-off environment. Any doubts about that can quickly be erased by taking a look at the US dollar index, which has been making near-term highs ever since last Friday's breakdown in the precious metals, which we'll get to later. According to reports on the street, many investors were placing their bets on a Romney presidency, and a breakdown of their white-collar hopes and dreams led to a breakdown in the equities. Also, further rumblings from the Eurozone, particularly comments by European Central Bank President Mario Draghi regarding a potential contraction in the German economy, led to sell-offs in that region's markets. As we pointed out in previous sessions, this almost always leads to gains for the US dollar. What's important here is not necessarily the truth of the matter, but how the news is interpreted by the movers and shakers in Wall Street. However, I'm not as bearish for equities as some of my counterparts in the precious metals community. Taking a look at Apple's 3-year chart, you can see that overall, Apple has been moving upwards in a robust and consistent manner, with the trend channel never being violated on the downside and always on the upside. Further, the 50 DMA never crossed below the 200 DMA, although it did get close in the middle of 011. Today's closing price of 538 puts it right in the middle of the trend channel, and there should be strong support at the 525 level to catch this downfall. If not, the bottom of the trend stands at 500, a very strong psychological support line. I wouldn't be bearish on this stock until it falls below that price, and even if it fell below 500, so what? It's not realistic to be a permabull in any market. 2012, for the most part, was wildly overbought in relation to its long-term trend. Now it's going to be wildly oversold to consolidate those gains. It happens in silver, it happens in stocks, so why would Apple be different? The world is not going to end. The stock market will be here long after we're all dead. So buy yourself some Apple. Finally, let's discuss the metals. I won't get into the minutia of this week's price action, but will instead focus on the trend, which is for all intents and purposes up. Taking a look at gold's 6-month chart, we see a strong inclining move, as the lower trend line was never substantially violated until last Friday. However, the price action since then has taken gold back above that support line and also above the 20-day moving average. Please note the massive increase in volume as well as a crossing of the MACD lines towards bullish territory. Finally, let's take a look at silver, where we also drew a trend channel from the June lows. From this perspective, the Friday drop did not violate the lower trend line, and the price is now slightly above the 20 DMA, which tells me that the sell-off was technically a false breakdown, as no new lows were secured. This is important as the sell-off resulted in a 42% retracement of the August rally, which is damn close to the 38.2% Fibonacci level, and further downside could have resulted in considerable technical damage. Instead, we are at the 20 DMA, which is also where the 61.8% retracement level lies. A close above 32.50 should see silver well on its way to $40 by year's end. And that will do it for this edition. Thanks for watching, and we'll see you next week.
For more unconventional ideas, please visit CrushTheStreet.com.